How's it going, everyone? I hope you guys are well. I hope you guys have had an amazing weekend. It's Sunday, 24th of February 2019. Pips of Persia here, coming to you with a weekly market outlook video, going through a few different pairs and preparing for the coming week. Now, before we get started, I have to mention a few disclaimers that these setups are purely for educational purposes and by no means require any sort of action. Your capital is at risk, therefore never risk more than what you are willing to lose, since past profits do not guarantee future results. Now, with that being said, let's go ahead and get started. I always like to start with the economical calendar for the coming week. We can see that we do have some high impact news across quite a few different pairs. 15 minutes before the markets open, we do actually have New Zealand dollar news. Therefore, in my opinion, the market's going to open with a gap for New Zealand dollar pairs. Tuesday morning, if I'm not mistaken, yes, Tuesday morning for pound, we do have inflation report hearing, so that's going to be quite an interesting day for pound. On top of that, we do have speeches for pound on Monday at 10 a.m, so about more or less as soon as the London session opens, and Friday at 1:15 a.m. for US dollar. So these speeches are some of the stuff that I'm going to look forward to as well. It should be an interesting week. Let's see how the fundamentals go with our technical analysis. Now let's go ahead and get started by analyzing the dollar index, DXY, and the dollar equal weighted average. What we can see on a high time frame for dollar index is that it is getting closer and closer to the end bit of this kind of triangle formation over here. The price is indeed getting more and more squeezed, so I am expecting a breakout to either upside or the downside. Now that's not necessarily something that I'm going to be looking forward to as an intraday / a very short-term swing trader. That massive breakout on a daily time frame that we're talking, that's something that swing traders should be, or longer-term swing traders / position traders should be worrying themselves about. For me, I'm looking to see where the dollar will potentially reverse in terms of the price. For DXY, I can see that we're actually moving down within this channel. On the 1 hour time frame, when I look at it, it'll be a bit more clear. So we have had a 1 to 2 to 3 to 4, and the 5th move is pending before the breakout happens to the upside, in my opinion. Not necessarily breakout out of the triangle formation, but a very impulsive reversal. So what I'm going to be waiting for is a move down to our key fib levels, being 61.8 and 71%, and going to wait for a push to the upside after those levels are met. It's quite similar to the dollar weighted index. When you look at it, we do have, on the 4 hour time frame, we do have an inverted head and shoulder formation right over there. Do have an inverted head and shoulder formation. The market's getting closer and closer to our fib level, being the 61.8, creating that right shoulder over there and tapping off this previous reversal area. So that's something that I'm going to be waiting for, either 61.8 or 71%. One of these two levels I'm going to be expecting the market to show some reaction to, for the dollar to go bullish potentially Wednesday, Thursday, Friday, but we shall wait and see. Now, regarding the pairs for this week, let's go ahead and get started with the Australian dollar pairs. AUDUSD. On the daily time frame, we actually ended up getting a very big daily bearish engulfing candle on Thursday. Now, this was very dominant in my opinion, because we actually tapped off 61.8 to perfection on the daily time frame, and the market it was more or less just on a free fall. It engulfed quite a few candles before it, very dominant bearish momentum. So zooming into 4 hour time frame, we can see that right before that breakout happened, we did in fact create a flag formation right over there. So we were kind of expecting the price to drop a little bit further. And now we have broken out of the flag formation and we've come back to more or less retested around there. It's just a matter of being able to find good entries to take more sells, because we do have this larger scale head and shoulder formation in place as well. So scenarios that I'm going to be waiting for is there's different scenarios. I can be expecting a double top formation over there for a potential decline. I can just assume decline now since we've gone for the retest of it. I can be working with a lower scale Fibonacci. I can see that within this lower scale Fibonacci, my Fib level was actually not met. So I can hope that the market can give me another push up to 61 to 71 zone and then reverse. If I happen to miss all of those, then I would simply draw my neckline and I would wait for a break and retest of my neckline of head and shoulder to take some sells based on that. There's quite a few different options that can happen with this pair, and to be fair with majority of the pairs, but point is you just have to, every more or less 4 hours, every time 4-hour closure happens, you just have to keep an eye on the pair and see how the market has reacted, see if there's any dominant price action, candlestick formations, that sort of stuff for you to be able to execute based on that. Australian dollar, Swiss franc on the daily time frame, again similar. We have a very clear and very strong bearish engulfing candle, where on the daily time frame we didn't actually close above this reversal zone. We've had a reversal over there, and a reversal over here, with a very dominant bearish engulfing candle. If I go ahead and put my Fibonacci in on the daily time frame from there to down here, I can see that that move up was indeed a reaction to the 71% Fibonacci, a very dominant Fibonacci level. So that move is very, very valid. It's a very nice move to have. Again, same as Australian dollar against US dollar, we do have head and shoulder formation. So I am expecting the price to decline. I'm expecting Australian dollar in general to be on a decline, to be honest with you. So again, scenarios that I'm waiting for, I'm going to be potentially waiting for a push up to this trend line over there for a potential decline. Other scenarios would be a break and retest of our neckline to take sales based on that as well. So again, keep an eye on this pair and see if you can find good entries for that. Australian dollar against the New Zealand dollar. On the daily time frame, I believe it was weekly that I was looking at, if I'm not mistaken. It was weekly for previous week where we closed very kind of bearish over there. But the major thing that I'm looking at for Australian dollar against the New Zealand dollar is this channel that the market is coming down in. Okay, so it's a very clear channel on the 4-hour time frame that the market is coming down in. And what I just deleted was a 1 to 2 to 3 to 4 to a potential 5 move right over there, bringing us down to minimum minus 27, but potentially minus 61.8 as well. The market did, at the third touch of this trend line, of this high trend line, the market did react to our key fib level, as we can see. Fibonacci drawn from up there to down here. The market reacted to our key fib level over there and was more or less on a free fall since then. So it's a little bit tricky to be able to find entries based on this, because in reality we should have been in the trade since somewhere up there, as it was a double top formation, fib level, tap over the trend line. So there's quite a few different things that I can assume that might happen in this specific case. I can be drawing little counter trend lines over there and wait for a clear break and retest of these counter trend lines. But the more dominant thing that I'm going to be waiting for is this line to be broken and retested before I take any sort of entries on this pair. Now the reasoning behind this is because I've put this line at, well, I need to change it a little bit, but the lowest closure that we have had previously. Okay, the lowest closure, as we can see. By this, I'm telling myself, if the market comes and closes below the lowest closure previously, then the bears have managed to push the price down even further. I'm simply going to be waiting for a retracement and take my trades based on that. In this specific case, this will be a really nice kind of intraday trade. I'm not going to go for too many pips off this pair. It's Australian dollar against New Zealand dollar, so it's quite a fast moving pair anyway. Euro against the Canadian dollar. Now on the weekly time frame, put myself a note here for daily and weekly. On the weekly time frame where I look at it, I can see that I have actually closed below every single previous closure around there. And this brings us back to May 2018. If I even go further back, it would be over there, around there. So December 2017, January 2018. So in the past year, we have not closed where the market closed last week. That's the lowest closure for the past year, which is telling us a very important thing. The market is very bearish right now. That's on a weekly time frame, a massive closure below all of these previous zones. And on a daily time frame, when I look at it, I can see a clear bearish engulfing candle, almost a Marubozu closure on the daily as well. Again, very clear signs of bearish momentum right over here. I'm just going to change this to put it right at the closures over there. 1.49 is the line that we were looking for that got broken to the downside. Again, the market kind of going down within this channel. We could be getting another push up to the top, to the high of this channel before we kind of execute any sort of sells against this pair. But in this specific case, it's actually quite simple. It's a simple break and retest of the structure. So I'm going to be waiting for a another push down to satisfy this lower trend line over there. A minor pullback to either retest the 1.49 zone or create a new lower high over there for us to be able to execute some sells based on one of these two levels, either up there or our 1.49 level. So EURCAD, I'm going to assume a very kind of strong bearish momentum for Euro against Canadian dollar as well. Euro Swiss franc, weekly Marubozu and wick rejections. Let's have a look. So weekly Marubozu is this candle that I'm talking about, not the recent, not the past couple of weeks. This candle is a weekly Marubozu closure. We do have some long wicks forming on the weekly as well. On the daily, when I look at it, we do have all of these. Well, none of them apart from this one actually is a clear shooting star formation for me. The more indecisiveness, doji signals. However, in general, when I put all of the candlesticks kind of next to each other, it is giving me some bearish momentum. Those long wicks, Marubozu closures, in my opinion, is a very nice bearish market as well. But I'm not going to rule out the possibility of a bullish move. Therefore, in these specific cases, you simply mark out your consolidation box. As you can see, I've put it from closure to closure. And simply, I'm going to be waiting for a break and retest of the consolidation box to either buy this pair or break and retest of this consolidation box to execute some sells based on that. I am more, I would say I'm more supportive of a bearish momentum, to be fair, especially because this trend line that we have coming up with the 1, 2, almost 3 touch over there, it was the consolidation happened when the market was trying to either respect the trend line again or break it again. However, we did end up breaking the trend line. So I am going to assume that we're going to break through this zone to the downside, close on the 4-hour time frame to the downside, and then give a retracement to the upside. The other levels that I should potentially be looking at, I can be looking at this level over here, where some potential reversals can take place around there. So we can get a move like this on the 4-hour time frame, something like this for us to be able to take some sells against. But then again, we're going to have to wait for London session or London New York overlap for us to be able to make good judgments based on what the market gives us. Pound Japanese yen. Pound Japanese yen on the daily time frame, we can see that Wednesday, Thursday, Friday was more or less was non-existent for pound Japanese yen. The market barely moved at all. On Tuesday, it was the day that pound Japanese yen had a very impulsive move. On a weekly time frame as well, we have actually came back to this previous weekly high over there, which has not been broken just yet. However, on a 4-hour time frame, we can see that we did have this bearish flag formation over there, bearish channel right over there, which was broken. Bullish channel over here. It's a bullish flag formation. As you can see, it's a bullish flag. However, some people might say it's a channel going down, therefore it's a bearish channel. But anyway, it's a bullish flag. We did actually form that over there. Within this channel, we did get a 1 to 2 to 3 to 4 to 5 move as well before the major breakout took place, as expected. Now, when you zoom in a little bit on especially on an hourly time frame, we can see that we are indeed forming another bullish flag formation. The market's trending within this channel, waiting for a potential breakout to the upside. So, in this case, the scenarios that we'll be waiting for are pretty simple. We can be waiting for a rejection of the low of this channel again to execute some buys based on that, so long as that lines up with some Fibonacci level from here to here. We can be waiting for a move like this, for example. But the more dominant move that you should be waiting for would be on a high time frame for a break and retest of where the previous market closed. I believe I put that closure on the 8-hour time frame, actually, if I'm not mistaken. You can do this on the 4-hour time frame as well, especially if you are using the free version of TradingView. So assume 144.6. Assume 144.6 area to 145 area. I would like to see a very kind of dominant closure above these zones, a potential pullback, and I'm going to write this pair up to the high of our trend line, which you can see on the daily time frame. 1 touch, 2 touch, coming up for the 3rd touch of that trend line. So again, it's a patience game, waiting to see how the market settles on Monday and Tuesday. Perhaps on Wednesday we get some reversal for pound Japanese yen and the market will shoot up. Pound Swiss franc. Daily time frame, we have a clear shooting star formation, not shooting star, sorry, hammer formation right over there. Again, similar scenario. We did have a bullish flag formation. The market was trending within this channel, ended up breaking out, almost coming back for the retest of this channel. Probably if I draw it a little bit better, we'd be very close to that retest. Okay, the market did end up breaking out and coming back for that retest. Ended up on the 8-hour time frame, giving us a bullish engulfing candle. So again, it's a very, very similar scenario. What I'm going to wait for is a clear break of this previous highs right over there. Going to wait for a clear closure above all of these previous highs, a pullback, and executions for a buy. If I end up getting a break above the 1.316 zone, let me change that, 1.316, which would be this high right over there. If I get a clear closure above that zone as well, again, I'm going to wait for a pullback and execute buys for a more longer term position. I was hoping for the market to come down and give us a better head and shoulder formation. You know, it hasn't really formed any sort of right shoulder over there. I really don't like the looks of that head and shoulder formation, but that might not happen, so I'm going to work with simple zones for this pair as well. Pound dollar, weekly shooting star, daily hammer, H4 bullish engulfing. So I don't need to say much because it's all written there. We can see that we've got a, did I say weekly shooting star? I think I meant morning star. Weekly morning star, 3-pin formation right over there. Bearish candle, small bearish or bullish candle, followed by bullish candle over there. And clear bullish reversal signal. On the daily time frame, we do have a hammer formation over there as well, which actually reacted to our key fib levels. And on the 8-hour time frame, not the best of bullish engulfing candles. But we do have a very kind of strong bullish momentum on the 8-hour and 4-hour time frames as well as reaction to the key fib levels. So again, similar to the pound pairs, other pound pairs that we were going through. Was it the pound pairs or was it Australian dollar pairs? I think it was Australian dollar pairs that reacted to the key fib level, but we missed the entry. What I'm going to wait for here is a break and retest of this high over there. Exactly like other pound pairs. Exactly like other pound pairs. Break and retest of the highs over there. Simple. We do have a inverted head and shoulder formation still in action as well. Okay, this inverted head and shoulder formation is still valid as well. So I believe pound dollar can actually carry on going up a little bit further. If I want to mark it out clearly on a 4-hour time frame, this would indeed be another kind of a bullish flag formation right over there as well. So keep an eye on pound dollar as well. It could go bullish, depends on the news that we end up getting for pound and for dollar for the coming week. New Zealand dollar against the US dollar. Let's see what we can see on a little bit higher time frames. Okay, I am working simply with the head and shoulder formation over there. We do have a very clear head and shoulder formation over there. However, we actually ended up getting some sort of an impulsive bullish momentum in the last about 16 hours of the market on Friday, or in general on Friday. So the scenarios that I'm going to wait for, I'm going to assume that this head and shoulder is valid. I'm going to be waiting for a potential double top over there before I execute my sells. Okay, I'm going to be waiting for a double top over there before I execute any sells. If I want to go ahead and put any sort of trend lines in as well, the main trend line I'll be working with would be this right over there. Okay, would be this trend line right over there. So instead of a double top formation, we might actually get a reaction off of the trend line over there. Expect the bullish move to continue, the market to give you a certain pattern telling you it's ready to go for a sell. All of the pairs that I'm going to go through, I have gone through right now, you would have to be waiting for candlestick confirmations anyway. So don't just jump into the trade way too early without any sort of confirmation. US dollar, Swiss franc. Let's see. So US dollar, Swiss franc on the 8-hour, 4-hour time frame, we can see the channel that has been coming down in 1, 2, 3, 4. We can get another push down as well. Another potential push down for US dollar against Swiss franc as well. But I would like to see a bullish momentum for US dollar against Swiss franc. I would like to see it satisfy some of the previous weekly highs. Let's say come up to the 1.13 zone, more or less, around that zone, 1.13. I would like to see some sort of a reaction a little bit higher up than where we reverse. In my opinion, it's just a little bit too early for the market to drop. If we don't end up getting a clear movement to the upside, then I'm gonna wait, and I'm gonna assume that potentially we could be forming a head and shoulder formation right over here, something like this, for the move to the downside, where the head and shoulder, the left shoulder would be over there, the head would be over there, the right shoulder is to be formed. I'm gonna wait for other patterns to execute potential sells based on that, but I would like to be catching the bullish move up. So in conclusion, what I'm going to wait for, especially because we have tapped off the key fib level, the market is moving in a bullish flag formation. I would like to see a clear closure above the previous lower highs over there to basically finish this clear bearish momentum. Closure above the previous lower highs, retest, and executions for a buy position. US dollar against the Canadian dollar. I missed the sell opportunity on this one, unfortunately. That's absolutely fine. We'll be catching the buy up. Trend line we have coming up. 1 touch, 2 touch, 3rd touch to be formed. We do have a very, very bearish momentum on the higher time frames. Very clear bearish closures. Evening stars, bearish engulfings. Very strong evening star on the weekly as well. However, the major thing that I'm going to wait for is to see whether the trend line gets respected once more or not. We do have an inverted head and shoulder formation, left shoulder, head, right shoulder to be formed. We do have an inverted head and shoulder formation as well. Therefore, I would like to see that this market ends up reversing as soon as it hits the trend line. If this bearish momentum continues, expect a clear break, retest, and the continuation to the downside. However, in my personal opinion, the technicals are there for us to be able to go ahead and execute some buys based on US dollar versus Canadian dollar. Looking at the indicators as well, we do have some convergence coming into play. The market creating a lower low, our MACD creating a higher high over there. Just wait for it to be a little bit more dominant on a little bit higher time frames, and you can go ahead and execute some nice buys on this pair. And finally, gold dollar. where on the on the daily time frame we have actually closed as a evening star formation. This sell was a very nice sell last week. It was over 200 pips if I'm not mistaken, and it was taken based on the 8-hour MACD divergence, very clear 8-hour divergence. We had news on Thursday at 7 PM if I'm not mistaken, London time, where it was quite good for the dollar and ended up pushing the price for the gold down. And we did have a reaction of this trend line where we have 1, 2, 3 and the fourth touch right over there. On an 8-hour time frame, we ended up closing as a shooting star over there as well. We got our pullback, closed as a shooting star. So I believe gold has more room to go bearish. I believe it still has it can still give us minimum another 100, 120 pips. So it's just a matter of being able to find good entries on this pair. Be very careful how you analyze it. Draw some clear trend lines in place. And you can simply wait for a break and retest of these trend lines, or mark your zones very, very clearly. For example, let's say this zone right over there, the 1323.17. So you can be waiting for a clear break and retest of that zone as well as the trend line and execute some intraday sells against this pair. If the lower trend line, being this one, on the 4-hour time frame gets broken to the downside, expects obviously a further bearish momentum for gold. That's all the pairs I'll be focusing on for this week. Usually I will wait for London/New York session to see how the market has settled from the weekend and from some of the news, and reanalyze it if I need to. Always remember to wait for price action before you execute any trades. I'll be sending updates for all of these pairs on my Telegram channel. I'm going to put the link in the description. If you guys have any questions, do not hesitate to contact me on social media. Again, I'll put the details in the description there as well. Let me know in the comments what you guys think of the analysis, which ones you agree with, which ones you disagree with, and why you agree or disagree with them as well. Let's have an amazing week. Stick to your trading plan and let's smash it.